Okay, so from our previous TA in 10 minutes or less, we had a position. I think it's currently a short position. We closed a long position, which was in profit, which was doing quite nice. You can see right here, we literally just missed our stop loss. There was a liquidity grab, which we anticipated, and it just fell below where our stop loss is. So that is fantastic. And now we are looking for a move to the downside, so we see how that one will continue. Now I may or may not decide to jump back in on a trade. It all depends upon whether we see some move to the upside, which looks, based on my opinion, slightly unlikely. I'm probably expecting more pressure to the downside. So what happened? Well, if you take the rising wedge that was forming on the 4-hour and pretty much all time frames, we had a nice move to the downside. We topped out some really key levels on the Nasdaq, S&P. Obviously, we were oversold on a lot. If you go back to the previous TA in 10, you'll notice that we identified some really bearish divergence on the 4-hour time frame. So it didn't come to too much of a surprise that we were going to start heading down. But the question is how far can we continue to go, and what gives us the opinion that we are in for more downside action? Well, let's just take some of our key levels to start with. So we have our daily or weekly open, weekly high rather, and weekly low, which you can see here. If we go to the weekly time frame, not the monthly, go to the weekly time frame, we have the weekly open, the weekly close, or the weekly low rather, and then this is the daily open. We can't really look at the weekly close because, well, we're still in the week. So then we move to the daily, and we can see quite clearly on the daily time frame we had Monday started bullish, Tuesday came out, claimed the liquidity at the highs of the previous day, and then came back down, didn't claim the lows of the previous day, and then Wednesday we done both. So market opened up, we came up, we cleared the liquidity from the previous day, which was Tuesday, came down, cleared the lows for liquidity that was below actually Sunday, Monday and Tuesday, which is very common, and then we kind of opened up here. Well, we closed here. So we can say like this: usually when you get this kind of formation Wednesday, that you're looking at the middle of the week to give you a confirmation on really which way the market may go. Now, for me personally, this usually, I keep saying usually, but this gives us the opinion that the bias is going to be down, because movement to the downside is easier to get the liquidity here than what it would be all the way up here. So from a market maker perspective, central exchange, liquidity, it's going to be an easier move to the downside. So I think the bias for me, and it gives confidence to the way you trade, is having a plan and an idea that you think will play out. So that's what we see. So I think the bias is currently down, so we can focus and concentrate on that. If we move back to the 4-hour, let's have a look at some other ideas that hasn't really changed. We know, let me make this the 12-hour. I think it gives us a better indication. So on the 12-hour, we can see that if we take let's say an Elliott wave, we can say, okay, well, this would be our impulsive wave move to the upside. 1, 2, 3, 4, 5. That's our 5 waves. Then we have a corrective wave A, B, C down here, or maybe here. You could say A, that could be B, and this could be C. And then we had our impulsive wave to the upside for 3. Then we're looking for somewhere for 4. As long as it's above 1, ideally you're looking for, and then we can have our 5th wave up here. Now, I guess the question is how far down do we go in terms of 4? Well, obviously, like I say, we covered this a lot. We can take our Elliott wave, our Fibonacci retracement tool, and we can look at where 4 could potentially go to. Now, we haven't really, literally from this push to the downside, we took the 236 area. That's fine. But you want to see, for me personally, for this to be a really bullish continuation to the upside, you want to see a fairly deep and strong, a 4th wave or a move to the downside, because in order for us to see this, it needs to come down and collect some liquidity before another push to the upside, because all this buy side liquidity here has just gone to the top and not much of a sell-off. So I think if you're a market maker, if you're wanting to to push and gain liquidity, you want to push back down. Even this move to the downside from the FTX, we came back and at least claimed, I believe it was 50%, but I may be wrong. Let me just see. Just shy of 50%. You can see here, even on this one where we came back, we got some level of retracement. But you know, right now on this earlier third wave that we're seeing, we virtually came back at all. So I do believe we are starting to see a correction. I don't believe this is the. I do believe that this is the end of the third wave, which again is why I think we can move to the downside. So that being said, I think we could potentially look at here the 382. We could potentially look at the 0.5. So what gives us more indication of where we may go? What are we on? We're on the 12 hour right now. Let's look at some key levels for where liquidity lies. Okay, so we have liquidity down at this well, just below the 2240. We have liquidity at this just below the 19689, 869, yeah. And then we have liquidity all this way down here. Now I don't think we're going to come as low as this, at least not on over the next couple of days. I think, you know, realistically we can anticipate maybe here, maybe a bit below here, maybe we come down and touch the 382, and that would be a nice move, and that would be something to kind of keep in mind. If we look at where we've maybe got some fair value gaps for the huge move to the upside, well, let's look at the weekly to start. Let me take the liquidity off. Let me take the Elliott wave off and the fib retracement. So the weekly, we've only got one. And it's this huge bad boy here. You can see this huge area here. If you go to the weekly time frame, is one big huge fair value gap. Now that for me is something that we need to retrace and close, like we closed this one. This would have been a previous one here, which was closed by this. We know the algorithms from most central exchanges, if not all, like to make sure that they clear any areas where there was unfulfilled orders or the ability to trade within, let's just say. Let's go back to that 12 hour. Then we have, again, if we take the weekly off, let's go like, oh, that was bad, didn't mean to delete that, going too fast. Let's go to the daily. What do we have? We have a few fair value gaps on the daily time frame. Again, we're nowhere near them right now. Now if we take let's just take our Fibonacci. So again, thinking about the numbers, we have the 382, so you could see this would start to close some of that gap. Usually you want to at least see midway point, but ideally even closing the gap all together really. On the 681 or the golden ratio or the golden pocket zone, we're right down here at this kind of 18376 to 18206. So again, another real key area to keep your eyes peeled on, because again, it's a fair value gap area. 4 hour of some a lot of kind of ones up in the higher region. If I go to the 4 hour zone, you can see you've got, you know, one at the around the kind of 20,000s, which again is just underneath the liquidity. If I put my liquidity on here, you can see liquidity just underneath this zone, have liquidity underneath this zone, and so on and so forth. So you know, when you're trying to build a picture, you're trying to look at where liquidity likes to go. Why does market makers like to move to areas of liquidity? Well, think about it, right? If everyone is just buying or everyone is just selling, then the market maker has to provide the opposing liquidity so people can sell. If people are selling, the market maker or central exchanges, if you will, have to provide that buy liquidity. The problem is they're not going to do that without knowing that there's ways in which they can move markets. So, you know, you could almost think that this pump here was very much instigated by central exchanges, because, you know, the pumps, there was no new BTC coming into the market. If you actually look at the data, there was no new kind of BTC coming in. It was just buying and selling of what was existing within the exchanges, and you can see it was very algorithmic in the sense that the push just continued to the upside. So the market maker doesn't think about it. If everyone's getting liquidated, if I'm in a position, let's just say, and I'm short, and then, you know, let's say ByBit starts really aggressively pumping the market to bring some liquidations in, it doesn't benefit them when money's getting taken out the market, but when you get liquidated, money doesn't go out the market. If anything, money just exchanged from sellers to buyers, and buyers to sellers, and sellers to buyers to sellers, so on and so forth. But where the likes of ByBit might make money, or will make money, is on the fees from such liquidations and stuff like that. So it doesn't really matter to them whether you're getting liquidated to the buy side or whether you're getting liquidated to the sell side. But if they're overexposed to one way or the other, that can ignite a chain reaction to force buys. And it's very algorithmic, and this is what these fair value gaps essentially are. It's ways in which where the price just really goes that fast that they want to come back down and test these areas to see, number one, that there's going to be liquidity in these areas because it's below where the activity's been. So they know there's going to be, well, this would be sell side liquidity. These would all be sell side liquidity actually. But there's not an awful lot going on above us right now unless we go right the way back to yesteryear, so to speak. So that's why there's a lot in favour now for moving back down and reclaiming some of these key areas. So just being mindful of that. Right, what else have we got? So let's take that off. Let's take the liquidity off. Let us look at some. Let's look at some fixed range. Okay, I don't think we've done this in a while, so let's look at some fixed volume profiles. Right, so let me just let me do that again. In fact, I think this is probably going to go over 10 minutes. I apologize. I don't want these to be too long. But let's look at this. So, where are our... Let's actually bring all of this in. So we're way above our local area high. In fact, let us try and go all the way to here. Right. Point of control, the value area high rather, is just at the 20,364. Point of control is all the way back down at 16,854, which is very interesting. However, we have a very interesting, let's say, stickiness here, right at that 19,168. Let us just mark that on the chart really quickly, and let's see, do we have confluence of anything else in this area? Let's start with a 2 hour, nothing there. 4 hour, right in the middle of two fair value gaps. So we could come down, close these two 4 hour fair value gaps. That would provide a nice retracement. What does our Elliott wave look like when we have, not Elliott wave, sorry, our right by the 0.5, yeah, so we're not too far away from the 0.5 is just literally on the 19k. And this would be just shy of the 19k. Sorry, just shy. So 19,139. So you could make a case that we could come back down to the. I mean, this is the point of control, but we're very close. We're just, in fact, you could argue that the point of control here, you've actually got more volume in this area traded than what you have down here. So theoretically, I would probably say that we have 2 points of control in this whole area, and this would be as far, you could argue that 19,200, 19,100, somewhere between that, 19,150 is another really strong area for where we may want to retrace back to. Would also clear two fair value gaps. That would be nice for the algorithm, and then we'd also hit our 0.5, which would be our fourth Elliott wave retracement, and then back to the upside for some movement back up. So that would be, something you could absolutely agree that could happen. What else do we have? Let's look at our pivot points. Okay, so pivot points, this is the monthly pivot point, I do believe, in DDD. Let me just double check what we're on here. So pivots, yeah, these are the weekly, apologies. So this is the pivot point for this week. Yeah, so the pivot point is 19,805. Sorry, 19,866. So we've obviously overshot the pivot point, and we should be wanting to come back down. This is the point at which we is the equilibrium, let's just say, for where we expect majority of trading to take place. But we have a resistance level up at that 22,500. We also have a support level down at 18,152. So if we overlay now our where are we? Let me just see. I've got too much going on. Fib retracements. So what do we have? Any kind of confluence here? Well, we have, yeah, our 618 or our golden pocket is right by where the R1 is. Sorry, the S1, so the support one. So again, we could see a sell-off, but I wouldn't anticipate this happening. You know, what day are we on now? We're on Thursday, so I don't, you know, for the end of the week, which we classify as Monday, possible. I just don't. I feel like we probably may if anything come back and retrace back to the pivot point here, which is key. But if we look at maybe having a look what the monthly suggests, so we are not too far into the month, are we really? Maybe halfway. Let's see. We're using the traditional one. Okay. Let's see. So right here. So we blasted through. I mean, this is crazy because you can see the actual pivot point is 17k for this month. We went through R1, we went through R2. If I look at adding, let's make these red. 3, 4. I've talked all about these. I'm not going to say how these are calculated. You know, you can just look at any one of my previous videos or videos to be able to see how we've done this. But basically, you can see here, you know, we came up. I mean, these are just perfect, aren't they? We just missed R5. Then we come round, lollygag around R4. The next R3 would be around 20k. There's also nice liquidity around that area, just underneath. Then we've got R2 down here, which is at that 19,154. Again, where that big stickiness area is, which is where we said from the point of control, or very, very close to the point of control. So there's a lot going on. So let's try to summarize. Right. So we're not looking for big, huge, crazy moves. Right. We're trying to think about how we can get in on a day, and how we can get in on how we can get out. So just using that idea, you know, let's look at what we're thinking. So in terms of, you could argue very much so that we have a order block here, okay, which you'd want to probably think about. Now if we put on our 15-minute, okay, we've got a fair value gap here on the 15-minute. We also have a fair value gap here, again on the 15-minute, and we have fair value gap. No, they don't want it. No. I think they've gone a little bit. Let me just double check my fair value gaps here. Yeah. Okay. Sorry, my bad. So we've got order block. We've also got a fair value gap. We may want to come back up, test this fair value gap, because we've literally only tested it once. So, you know, maybe an idea might be that we come back up, we test here. So it's kind of your 21.30 zone. Maybe if we go to the high of the fair value gap, you're looking at 21.58. Would be a nice area to maybe think about getting a short entry in, and then maybe coming down, breaking through this, collecting this liquidity, and maybe thinking somewhere, you know, I would be aiming at least here, but favorably more around here. So you come down. If we put our liquidity on here, you know, we've got lots of liquidity just underneath here. This was the previous pivot low. I would be looking, you know, somewhere in this area for the take profit. Sorry, that was not great, but I think for me personally, I'm currently in a long. Where is my in a short position? As you can see, this was my entry up here. I think if we come up to this zone, or at least this zone rather, I'll probably add to my position for a move down. And if I take this long off, just because, the short off, you know, we've got fair value gap, we've got a order block here. I'll be aiming, you know, for me personally, because it's a longer position. Longer position, I'm aiming for around this 19k area, which is to clear out a lot of liquidity. It's more in line actually with the where are we, fib. It's more in line with the fact that I think we can at least come back and claim the maybe if we go back to the higher time frame a little bit, come down to the 382. I think that's at least possible with this move to the downside and this week. And again, you know, going back to the start of the conversation, for me the narrative is down. we've started the week off positive, then we had a negative day on the Tuesday, then we whipped back and forward, claimed the liquidity to the high side, claimed the liquidity to the downside, but then finished the day lower. And then we obviously finished off now where we're kind of in this kind of lower position. So that's what I'm aiming to do. That's my plan. Hopefully you guys enjoyed this one. Let's just have a quick check at Bookmap to see what confluence this brings in any way. So looking at Bookmap, we can see, let's just look at, just give us a second to sort itself out. Are we stuck? No. Oh, okay, sorry. Looking at Bookmap, we have, when you're ready, Mr. Map. Okay, so we have obviously a shit ton of liquidity at that 20,250. To be fair, that hasn't moved in such a long time. I covered this in the last video, which is where my ultimate target was, but then just because of the way, I think it would be a good place to take profit for sure. However, I think we've got more legs than that, just simply because if this move to the upside's got any chance of sustaining itself to be, you know, a much, well, you want to at least your fifth wave to be as good as your first wave, and the first wave wasn't great, to be completely honest. The third wave was really the powerhouse. But I think, as I say, this area, this 19.8, what have I got as my my long position? It's 19.6, about 19.5, but that's just at the 382 level. So going on here, if I look at kind of this, a lot of the times what you'll see, and I think this is why you've got to be mindful when you're looking at Bookmap. A lot of people think this is just an amazingly fantastic tool, and they think, okay, I'll just put my orders just above here, or just put just above, so I get filled, because this will act as an absorption. Sometimes you can definitely see that it will act as an absorption to say that the price will come down, hit the zones here, hit the bids, and then the price will reverse back. But the problem is, if it breaks through this, that's that liquidity gone, and then it's gone to the next zone, and then so on and so forth. So there's absolutely every chance it can just smash right through this. This is just showing live order flow, i.e. bids that are in the market that's currently in the order book. It doesn't show you where liquidation zones are, doesn't show you where market orders are going to be aggressive. So that's just something to take into account. This is people's ideas where they expect a rebound to happen, and obviously you've got to always take note. I mean, that's, you know, 10,042 is not a small amount of, you know, orders of BTC. So just something you've always got to be mindful of. However, the TA for me is I think we can push that a bit further down, which is why I'm not too focused upon taking profits at this zone here, but maybe looking more around this kind of, you know, 19.5, 19.6 area, because I think we've got a bit of a move to go yet, and I'm patient as well. I'm not in any position. I'm going to start moving. You know, I'm going to add on to my order if it wants to come up to that zone we spoke about, and I'm going to you know, once we move back down, if that's the case, I'm going to start, you know, lowering my stop loss, so I'm always in a guaranteed position. So that's all I've got for you today. Hope you got something from this. Any questions, drop them in the chat. If you want to trade with us, if you want to understand how I trade and kind of understand, you know, what we're looking at and get more involved, come over to the Discord server. There's lots of really good concepts and training modules and stuff like that we're building. If you want to trade with us in terms of understanding how I trade, there's crazy bonuses available if you follow the link in the description to my ByBit account and use that referral. Just give that a go, and then yeah, we'll see you in the Discord and speak soon. Thank you very much. Bye for now.